All right, what's going on, everybody? It is Tuesday, July 6th. So we had a little bit of a pullback in the Dow and the S&P. NASDAQ eked out a small positive close after coming down hard, and then it bounced back. Looking at the fiscal flows, year over year, there's definitely a slowdown in the rate of growth of spending. If I'm looking at average daily flows, that's average daily spending by the government, that's kind of flattish, but I suspect it's rolling over. Although right now, just graphically and numerically, it looks kind of flat, and it's definitely down from the April period when it was really, really strong. So, stable might be good. And again, we see in July now, mid-July, we're going to get those child tax credit checks going out. So that might be something. But right now, the main drag on spending, not surprisingly, are those unemployment benefits that have been cut. So like, for example, 2 weeks ago, the average daily unemployment benefit flow was 1.7 billion, and now it's down to 1.5 billion. So that's a 200 million per day reduction. So if you amortize that out over 30 days, that's 6 billion a month of reduction. That's significant, okay? 6 billion a month of reduction. And don't forget, I mentioned this yesterday, the job report that we got last Friday, very strong on the payrolls, but we saw average hourly earnings down for the second consecutive month and just increasing at the slowest rate in 3 months. So, it looks like people are going back to work because they've lost their unemployment benefits, but they're going back to work at lower paying jobs, or the income has been reduced. At least that's what it looks like over the last 2 months worth of data. And there's no way I can construct a really bullish economic picture if incomes are going down. Incomes equals GDP. They're equivalent. So, if that's slowing down, then necessarily, yes, we're going to see slower GDP growth. But again, all this stuff might pick up in mid-July. When you're at an inflection point, sometimes it takes a little bit of time. Look, I've said to people in the past, especially, people who I've coached or whatever, when you gotta really, really look closely, and, you're just trying to find any little tidbit of evidence or information, and you're just, every day racking your brain, let me look at this little thing, let me look at this minute little change. Then it's probably telling you that, you gotta wait. Because one thing I can tell you right now with 100% certainty, when things are obvious, they are obvious. In fact, they're more than obvious. What do I mean by that? When markets correct and things go too far on the downside and there's value everywhere, it becomes extremely obvious, to the point where, you want to dive in on everything, and then it could even get more extreme in the sense of, undervaluation. Same thing on the upside. Like, when things become obvious, they're obvious. Right now I would classify it as, not really that obvious. And I'm saying this from a personal point of view, that if I have to go through these like minute little investigations every day, looking for some tiny little, shift in the data point or something like that. It's not obvious. It's gonna be at some moment. I mean, there's no question about it. It's gonna be obvious either that we'll see a precipitous drop in the flows. At that point, it becomes very easy to say, hey, you got to go short the market, and then holding on to that position for me anyway is very easy, because that's telling me what basic conditions are going to be like. All right? And vice versa. If I see this thing start to reaccelerate again, the spending, I don't care what the level of the market is, and I don't care what, let's say, traditional valuation measures look like. I'm going to jump in with both feet, buying hand over fist, because I know it's going to go higher. You just have, it's like physics. I mean, you're going to have the energy, the kinetic energy to push this thing higher. Right now, you're kind of like in a scenario where, I'm looking every day for some indication that we're seeing a breakdown in conditions. And okay, as I've been saying, it does look like things are slowing up, but is that slowing up to the degree where, we're going to see a meaningful deceleration in the economy? I don't know yet. It's going to become obvious when it becomes obvious. That might sound like a ridiculous statement, but, that's the best way I can phrase it. And there will be a time, there will be a moment where I'll come on here and I'll be telling you it's so obvious it's ridiculous. So anyway, that's what it looks like right now. We got a little bit of a pullback in oil today because, look, the OPEC meeting fell apart. They were supposed to come up with a new production agreement which would have increased output. That fell apart. Everybody got real bullish. I mean, that was late last week when the meeting started to unravel. And, we got to remember one thing, that oil is economically sensitive. All right. It's also obviously priced by the cartel, by OPEC. But if we see a slowdown in the economy, I mean, we'll get a decent sized correction in oil. But again, it rests on that factor. I mean, will we see a decent slowdown in the economy? And again, the answer to that, that's the fiscal flows. All right? And somebody said, Mike, why are you looking at the daily things? You should look at the monthly flows, which I do. But look, you're getting into an argument of, semantics. You're getting into an argument of, timing, in the sense that one is better than another. It's not. It's like people who trade using moving averages. Like, I spent years and years and years as a novice trader, trying to develop systems with moving averages and then curve fitting. In other words, I'd start with really short-term moving averages, and that would work for a while. Then I get chopped around. Hey, let me move out to bigger ones, and that would work for a while, and then you get chopped around. Trying to curve fit. Trying or believing that there is one time unit that works perfectly. That's, again, the chase for the system fairy. Like believing there is some system, some measurement, some unit that will take away all the unknowns, and it will work every single time, and it's a parameter that perfectly describes, market action, economic behavior, whatever. It doesn't exist, and it's irrelevant. I'll tell you this. It's irrelevant what time frame you look at. You have to look at what the trends are in terms of what's happening. Okay? Is it going one direction or another direction? And again, you have to look at the factors that drive basic conditions. And if you think you're getting close, if I think I'm getting close to an inflection point where, let's say the fiscal is changing, I will look at it each day to see if I can pick up some trend development there, some, linearity in the numbers, which I think I did. But, got to let it play out a little bit more. Again, when it becomes obvious, it becomes obvious. You don't have to rack your head against the wall. You'll know it. No doubt about it. Anyway, that's it. I did a podcast today. It'll be up tomorrow on my, I'll upload it tomorrow. You can listen to it. And in the meantime, don't forget, sign up for a 30-day free trial of MMT Trader. Go to my website, pitbulleconomics.com, and sign up today. Don't forget to like and subscribe. Thanks very much. Bye.